For many investors and regulators, outrage over exorbitant Wall Street pay was the fuel that fed the fire that led to the financial meltdown. Many believed sky-high paychecks for top executives encouraged the excessive risk-taking that led to the near collapse of the economy. But just like the financial services industry since the crisis, Wall Street's pay has been downsized and restructured. Mary Thompson has more.
It's lunchtime at Harry's Cafe and Steak in New York City's financial district, and business is brisk.
I think the mood on Wall Street is good. It's still not where it was. I don't know if it ever will be.
A lot on Wall Street's changed since the financial crisis, including the spending habits of the traders and bankers. General Manager Jean-Baptiste Caillet says frequent the restaurant.
Harry has one of the best wine collections in New York. So we would see bottles of wine at $5,000, $8,000 for lunch. That was a very common occurrence at the peak. Today, it's rare.
Wall Streeters' relative thriftiness reflecting changes to their paychecks since the bubble.
We don't have the huge bonus potentials that were there before, virtually unlimited in some respects.
Compensation consultant Dave Schmidt says while Wall Street remains well paid compared to Main Street, overall pay is down due to a struggling economy, weaker bank profits, board's concerns about shareholders voting down compensation packages, and disclosure and reporting requirements mandated by Dodd-Frank. How much has pay fallen? The compensation firm Johnson & Associates predicts this year it will be 39% below 2007's record levels.
There's less tolerance for underperformance. Businesses or individuals who don't perform just don't get paid.
Consultant Alan Johnson is the dean of Wall Street compensation. He says not only are Wall Streeters making less, they're getting less of what they earn in cash bonuses, even as salaries are higher. Salaries rising to make up for a greater portion of total pay being issued in performance-based stock vesting a few years out. To critics of Wall Street pay, Johnson says the changes have addressed one of their chief concerns coming out of the financial crisis.
There's so much focus and there's so much transparency. Certainly pay today isn't encouraging excessive risk.
Keeping checks on the paycheck paying off by limiting risk. For Nightly Business Report, I'm Mary Thompson.